At the moment, long-dated government bonds, would you be a buyer of those?
But personally, no. I think, I know the inflation numbers were good yesterday. And again, the other thing about numbers, you dig into these numbers, really dig into them, and I wouldn't give them too much credence. They kind of have some consistency month by month, but the actual numbers themselves, I think Kevin Warsh is right to say, let's look at how all these things get calculated, and which ones react to, and how you weigh and balance them. I would not be a buyer, and part of it is interest rates. Inflation. Even if inflation was 2%, the 10-year bond should probably be at 4.5, or 4 to 4.5, and the short rate should be at 3.25 or 3.5, and they're almost there today. So I don't understand what the upside is, even if you think inflation could go to 2%. And it's been over 3% for almost 5 years, and went up to 4 now recently because of the gas price coming down. It may very well tick down, but being an economic historian, I can't take out of my mind what happened. After the Great Recession of '74, deficits were less. Guns and butter because the Vietnam War was over, it was away, and it climbed, from 3.5% to 5% to 7% to 9% to 11%. And you could say, well, oil is a big component. There was the oil crisis of '73 and then '80. Yes, that is true. Or, unions were more powerful. All these reasons, but it didn't stop.
That was Wilfred Frost sitting down with JPMorgan CEO Jamie Dimon on his Master Investor podcast. The full episode will be out, by the way, on Tuesday, about an hour-long episode. Wilfred is here at Post 9, though. Lucky us to discuss. He's also a Sky News anchor, CNBC contributor, longtime partner. We miss you. We're so happy to have you back.
Thank you for having me,
Welcome.
guys. Honestly, it always feels like coming home.
Yeah, so you talked to Jamie Dimon.
Indeed.
And what was your takeaway?
That theme, that line that he said last week after earnings is as good as it can get. Obviously, they had these blowout earnings. I think he applied to the equity market as a whole, but also the bond market, as we heard in that clip, that we're kind of last chance saloon in this sort of moment in time. And on the S&P 500 broadly, I kind of try to push him on that. It wasn't as explicit a kind of line as we got on the bond market there. And he said, look, there's lots of great individual companies. But when pushed, it was a similar theme, as he was with earnings, as he was clearly there on the bond market.
Yeah, I tend to think that he goes for the negative. He has made a lot of warnings in the past about, things like private credit. And you always have to pay attention with Jamie Dimon. He's sitting on top of the biggest bank. But on storm clouds, he's warned about the bond market for a long time. And about the effects of, the unwind of quantitative easing and stuff like that, the high debt loads. Some of it's come true, not all of it.
Yeah, for sure. I think that there was a particular moment in time, I think, with that big call on bond markets a few years back because, no one quite expected COVID to come around. So I think that undid that pledge a little bit. Look, on top of that, we talked a little bit specifically about the SpaceX IPO. I pushed him a little bit on the valuation there. And then on the long term as well. As you said, I had 60 minutes with him. I've interviewed him, 6 or 7 times, but never at such length.
You've interviewed him 67 times?
6 or 7 times.
6, 7.
Sorry, 6, 7, yes. Yeah. Lots on leadership. Lots also a bit on the UK as well and New York and what the leaders there are doing in light of course, a new prime minister in the UK. And he talked a little bit about the loneliness of leadership as well, which I've never heard him open up about, as well as what flashed before his eyes when he had that near-death experience in 2020.
So he told you in confidence who the successor is going to be as CEO?
I pushed him on that. And, he clearly doesn't want to admit that there's any change in timeline, despite perhaps the most high-profile part of that was the shuffling out of Marianne Lake, as opposed to just the promotions of Doug Petno and Troy Rohrborough. The area I wanted to ask him about there was, is it really the case that Jen Piepszak is off the list, is out of the race? And he kind of was a bit of a grey area on that. My assessment of all of it is, if it was tomorrow, and obviously the hope is of all that it won't be tomorrow, she would very much still be in the running. Don't forget, he didn't rule her out, as essentially he's done with Marianne Lake. She did, and I don't think that means she's 100% out if something happens soon. If not, clearly it's going to be Troy or Doug going forward.
Of course, they just posted the best quarterly profit in the history of banking. And a lot of that's due to their investments in efficiencies and AIs. This quarter, there was no blow-up headline about expenses, for example. Did he go into how that's all 1,000 use cases beginning to take fruit?
The bottom line on earnings is, as he said, that it's kind of perfect situation at the moment for banking, and how much longer can that go on? To your point, he wasn't super bearish. He's not saying sell everything right now. I think he's cautious about where things can go from here when everything's essentially firing on all cylinders at the moment.